Hi, this is Amir with the Bulletin Board Heroes here at Zacks Traders Cafe for Wednesday, the 18th of September. Starting off with the FTSE 100, where we've modified our broadening triangle from May into a falling trend channel, the red channel there. 83.50 yesterday's high, and below that there's the risk of testing the floor of the overall rising trend channel from this time last year, 82.10. Below that, the problem could be that we head as low as 80.15, which is the floor of that May channel. RSI now on the 50 mark, so it could go either way, hoping that obviously we stay within that rising channel from back in September last year and then break 83.50 to then move higher. But at the moment, right in the middle of the range. Moving on to the DAX, and here a picture of consolidation. At least we managed to finally close that gap there, the top of the gap there at 18,700. Above that, looking for a retest, obviously, of the best levels of the month so far towards 19,000. That's a record high, and also up to the top of the rising trend channel from last October, 20,100. Hopefully by the end of next month. In terms of support, it is hopefully the floor of the channel there from October, and the 50-day line around 18,200, which should step in for the market. Clearly, we're waiting for interest rate news on the other side of the Atlantic today. We see that Dow backed off the best levels yesterday, slightly down, but basically flat and in a good place, I suppose, above 41,500. Above 41,500, we're looking for as high as 42,900 by the end of next month, where obviously this market could actually get up to that level by the end of this month. On the downside, hoping for nothing lower than that broken July resistance line, 40,750, and that's just above the rising 50-day line. So still looking constructive there on the Dow, and the most on the downside would be the 50-day line as we had the other week. Moving on to Bitcoin, which has continued to be a problem child in terms of its price action, trying to get on the right side of 60,000, but at the moment just trading slightly below it. The good news, I suppose, is that we are actually finding support above the 50-day line there, 59,300. RSI is also above neutral 50 at just under 54, so that does suggest that we should be looking at the recent August resistance around 65,000 as a near-term target, just above the 200-day moving average there. Below the 50-day line, and we have the risk of heading to the floor of that falling trend channel from the end of February, around 52,000. But at the moment, that is seen as the worst case scenario. On to gold, and here we pull back a bit from the highs above 2,600. Still looking for up to 2675 by the end of next month at the top of that rising trend channel from December, and hoping that we'll have nothing lower than around 2565 as new support on any pullback such as we are having at the moment. Worst case is we have to head down to the floor of the channel there from the end of last year, and the 50-day line currently around 2495. Moving on to the stocks, and rug pull for Avacta, which was apparently caused by Deutsche Bank querying the company's fundamental data. I have to say that 35 years of listening to the big city investment banks have never actually known them to be that helpful or that right. Normally they tend to be an opposite signal rather than a correct one. But in this case, we hit an uptrend line there on Avacta from July. That was around the low yesterday, 56 pence, and interesting that today we've actually pushed up much higher than that, so it could be that that was a rug pull and we'll head back to the top of the range in the mid-70s. Bit early to say that, but that looks to be the picture at the moment, especially, as I said, after what looks as though it was perhaps a deliberate rug pull, given how strong the shares were above 70 pence until the end of last week. Moving on to a stock which is perhaps less controversial, and Arkle Resources. Here we've got the chance of a broadening triangle rebound, bear trap rebound from below the 0.2 pence level, the low of July, and above that looking for not only the 200-day moving average at 0.3 pence, but as high as 0.55 pence maybe by the end of the year. Early days yet. The first thing to do is to get above 0.25 post-July resistance on an end-of-day close basis. Onto a stock which has come off the boil of late, but maybe ready to revive itself, Amaroq, and here we've had the bear trap gap reversal, so pushing below the August support there at 59 pence, and then gapping back up again above 59 pence rather, looking for the shares to head up to the 200-day moving average area at 70 pence, even if they then fall back again. But bear trap gap reversals, and also the bullish divergence that we've had as well in the RSI window, lower low there for September, much lower low for the share price, but the RSI holding steady is a sign that we've got a bit of strength in the mix there at Amaroq. Moving on to Sizzle, which is looking rather better of late than it has done for quite some time. We had that U-shaped bull flag above a gap higher, and we're doing the same again actually, so it looks as though someone's pretty keen on the shares. That suggests that we could head up to the top of the broadening triangle there from back in July last year, as high as 2.9 pence by the end of next month. But holding that gap, very encouraging indeed on the Sizzle chart. Another encouraging situation is GSTechnologies, where we've curved higher along with the 50-day moving average above the initial September resistance, 0.78. We were looking for an initial target there, 0.94. We're very close to that, the high at 92.5. Above 0.94, we're looking for the full Monty, which would be 1.4 pence, perhaps by the end of next month. But looking encouraging there, especially with that very U-shaped turnaround that we've got there on the GS chart. Onto a stock that I'll hardly ever look at, which is Kooth. And here we've gapped through previous resistance there around the 327 pence level, above that. And after the gap up high break that we had today at £3.45, looking for £4 as soon as the end of this month. Ideally, obviously, we close above the yesterday's high at £3.45, and ideally there's no end of day close back below yesterday's low at £3.34, but a nice looking position or situation there. Moving on to Enteq, and here turning around with a gap close yesterday, so closing above the old May gap there at 8.25 pence. Above that, we're looking for a turnaround within a broadening triangle there as high as 13 pence, hopefully by the end of next month. But the key here is holding above that gap there, which we closed yesterday, so hopefully that will work as a setup. On to the next situation, which is Phoenix Copper, which I think I looked at yesterday, but very excited about this one for some reason. A break of that resistance line there from June at 17 pence suggests that we're on our way towards a price channel top there from January as high as 26 pence by the end of next month, or even sooner. And as you can see, we've had consecutive blue candles there for the shares since they came off the low, so looking as though somebody is quite keen on that situation. Moving on to Sovereign, where the conundrum in terms of why the shares are not double or triple their current price given the Rio involvement continues, but rising trend channel there from February, floor of the channel there at 30 pence, and above that we're looking for up to 42 pence by the end of next month, so reasonable progress within that channel. On to Sho Zone, which has obviously had a bit of a knock, and here you can see that previous suggestion that the shares were turning around looks to be correct, breaking that neckline resistance there at £1.56. Above that, we were looking for the top of the rising trend channel base from May as high as £1.88, and we're looking for that by the end of this month. If you're a fan of the shares and looking for greater glory and greater recovery, then the next level up would probably be around the £2.15 level, the upper parallel of the rising trend channel. On to the last two, and the first one is Thor Exploration, where I know somebody paid 20 pence yesterday for the shares. And the current situation is that we managed to hit and play around our first target there around 18.3 pence, 18.25 pence. Next target up is 23 pence, which we're looking for, I think, by the end of this month. The real driver here, apart from the fundamentals, is the way that we had an unfilled gap to the upside, and the shares have found support well above the gap top there at 15.75 pence. Finishing off with Trinity, which is in a rising trend channel base, and here another gap higher. We've had Nice gap higher back in May, then July, and then, although we had gap down, we've had a gap higher now, so that's a Bear Trap Island reversal, and looking for 68 pence pretty keenly by the end of this month. That's it from me today. More updates tomorrow.